TipRanks presents Tip Talks, the only podcast where you can listen to the insights, discover the trends, and power up your investment portfolio. Investors, welcome back to Tip Talks, where we're going to go into a very special episode of Tip Talks today. Based on the news of Charlie Munger's passing, this one is in honor of one of the most legendary investors of all time. Now, I want to get into a little bit of what's been going on at the Federal Reserve and then wrap us up really with an overview of how we should be concluding the year here of 2023 and entering into the new year of 2024, because we have a TipRanks tool that I want to show you all through to help every single one of you out in picking the right stocks for the upcoming year. So first and foremost, like I shared with you, I want to go into a contribute here for Charlie Munger. Based on the legendary investor here himself, I want to pull up a special quote of his. It's actually one of my favorites of his, and that is, "The big money is not in the buying or selling, but in the waiting." And I want to begin with that quote because it's actually going to come full circle here towards the end of today's Tip Talk as we go into the stock talk. Now, with that quote, I think what we're losing track of a lot of the times as investors is just this notion of needing to be patient, P-A-Y, patient with a Y, right? Because in time, you will find, just like Buffett found and just like Charlie Munger and some of the other greats, that the real wins come from remaining patient in the market. Now, what exactly does patience look like? It's not necessarily what I always like to joke about, getting rich by Tuesday, right? If you invest into a stock and buy it really for the ticker symbol and the number, it's more so about an investor coming to the table and doing their due diligence, finding a company, an actual company, and then going ahead to invest in the company as if they are really taking part ownership in that company, because that's legitimately what's happening as an investor. So with that in mind, I want to now talk just briefly about concluding 2023 here and what's going on at the Federal Reserve, I guess from the Powell standpoint, and how we as investors should really be thinking about the end of the year and then entering into 2024. So just zooming out a little bit of a macro lens here, what we've been seeing over the past couple of weeks, of course, we've had earnings season, we've had some economic data come out, but most importantly, were actually the Federal Reserve minutes that we got last week. Now, the minutes that came out had actually depicted essentially a more hawkish stance out of the Federal Reserve. Now, what does that tell us as, the investor that is waiting for what exactly is going to come about from these interest rate hikes that could be looming? Well, a hawkish tone out of the Federal Reserve is certainly only going to continue to spook investors away, with interest rates remaining higher for a prolonged period of time. Certainly not the best news for us investors. However, and keeping with this Charlie Munger quote, right? Being in an investment for the longer term, we don't necessarily need to be so shocked and afraid of the news that will come out of the Federal Reserve. And why am I sharing all of this? Well, simply because on December 12th and December 13th, we're going to get the next FOMC meeting. That's when the Federal Reserve is going to announce whether or not we're actually going to get another interest rate hike, or if they're just going to pause and they will have essentially shared that, the data that's been coming out is, pretty strong for them to now run in the opposite direction, take a pause, take a breather. And that's really what all of us market participants want. Right? We want to end the interest rate hikes, and it's certainly from the investor standpoint, right, not the greatest news when pressure is put onto stocks, and now we're all scrambling for where to look. However, I want to play two scenarios out for you. The first scenario is, we actually get a interest rate hike. What exactly happens? Well, easy. We have pressurized businesses, pressurized consumers, and of course, inflation is not yet at that 2% goal of the Federal Reserve, so we're really going to be hit on two different levels, right? We're going to get hit from higher levels of inflation, and then we're going to get hit on the other end there of having higher levels of interest rates, both of which cause a lot of pressure. Now, on the other end, the secondary scenario here, we get the Federal Reserve who comes out. They're a little bit more dovish, and they're going to deliver through some softer news that they're not going to hike. Of course, everything is contingent upon the data. But I started off with that beautiful Charlie Munger quote that the money is not in buying or selling, right? It's in that waiting period. So this leads me to how to really invest and double down into high quality investments entering into 2024. Now, that is incredibly important for all of us to do simply because we, of course, are in the investment game to make money. So I'm going to go ahead and jump over to the TipRanks website. You'll see it here appear on the screen. We are right now on the homepage of TipRanks. Now, one of my favorite tools on TipRanks is actually the simplest tool to use on TipRanks. It is our stock screener. This stock screener allows all of us as investors to filter through literally thousands of stock opportunities. Notice I call them opportunities because every single stock is an opportunity for an investor, but it may not be the right opportunity for your portfolio. So our stock screener here, we're going to see, we'll scroll down a little bit. We now have over 7,800 stocks that are in front of us. That is definitely way too much for us to sort through. So we're going to go ahead and enter in some inputs here. First and foremost, in just understanding this macro environment, right? Taking into account both scenarios. Whatever happens will play out as it will, but we don't want to be invested for the near term per se. We want to go with that Charlie Munger and Warren Buffett approach, right? Be in it for the longer period of time. Stay patient. It pays, P-A-Y, to be patient. Now, with that, we can go ahead and hit market cap. We're going to get this nice drop down here and select mega caps and large caps. Reason being is I want to stay a little bit safer. Reason being because I don't necessarily know what the Federal Reserve is going to come out and say or do, how that's going to impact the market. So let's stay safe while we can. Next up, we're going to head over to just below there. It says top analyst price targets. We're going to hit that drop down. We want to go with upside potential here of over 20%. Who doesn't love that upside of more than 20%? And for the fun of it here, we're going to go into upside of 10 to 20% as well, just to see the stocks that are coming into action here. We can now see that we are only at 454 stocks to go through. Still a lot of stocks for us as investors to sort through. So let's keep entering some inputs here. Two of my favorite indicators, which I'm going to show you through now, are actually insider signals and hedge fund signals. These two indicators on TipRanks, I think, are by far some of the most powerful signals that we have for you as investors. Because depending on what the insiders are doing and what hedge funds are doing, I'd like to think that those insiders and those who we call smart money have more knowledge or more insights at their fingertips than we do as the average Joe investors, right? So we're going to click on the drop down here of insider signals, hit positive. We're going to go over at hedge fund signals, also hit positive there. And now you're going to see that that list that was over 400 stocks has dwindled down to just 17. Now, just taking a look at the first top three stocks, we have Bristol Myers, we have CVS Health, and then we have Enterprise Partners. What's interesting to me, however, here is that we do have two healthcare players. Of course, healthcare players, no matter what goes on with the economy, up, down, anything in between, they typically are safer plays. Just for the sake of today's Tip Talk, we're going to go ahead and hit Bristol Myers. As we all know, it is a healthcare gem. And I want to go ahead and hit year to date here. And we can see that Bristol Myers is actually down by nearly 30% on the year. I know what many of you are probably thinking. Run the other way. If I was newer to investing or perhaps couldn't quite stomach the volatility, that's exactly what I would be doing. But keep in mind that Charlie Munger quote that I keep referring back to, right? It's going to pay to be patient. Because if I go over to 10 years here, just want to share this with all of you, we do have upside over the course of the last 10 years of 27%, which is a signal that I certainly like to see. However, we can also go over here to hedge funds, see what they've been doing over the last quarter, and we do see that hedge funds have actually increased their holdings with Bristol Myers by over 2 million shares last quarter. Also a strong signal here, because as an investor, we typically know that smart money will invest into a position for the longer haul, right in line with that Charlie Munger quote, if you will. Head over to analysts here, and we now see a very exciting metric. We have top analysts who are targeting a share price here of $62.58. That is nearly 30% now worth of upside. Great numbers that I like to see, but I want to take you all to one point here when it comes to Bristol Myers. And if we keep scrolling down, we're going to get to the best analysts covering the stock. We're going to see across the board, we have our analyst Terrence Flynn here. And this is the recommended analyst for all of us to view when it comes to Bristol Myers Squibb. Reason being is because we have Terrence, who has had a tremendous success rating from a 1 month period, 3 months, 1 year, and 2 year periods. Now, if we go ahead and just, as again, that long-term approach, use that Charlie Munger quote of ours, we can go look at 1 year out and 2 years out, run with Terrence Flynn, who's rating Bristol Myers right now a buy. He has a success rating on 1 and 2 year periods of 100% and 92%. So I like my odds here. But investors, I want to wrap us up here with this. While a play like Bristol Myers may be down 30% on the year, we go back to a legendary investor like Charlie Munger. We get his quote where it pays to be patient. Stay in the game for the longer haul. We may get near-term volatility, certainly when it comes to the Federal Reserve delivering their news. Of course, as we actually enter into a new year, what we typically see is a lot of excitement, high volume trading, and a lot of activity. But typically today, we don't have a lot of investors who are remaining as patient can be. And in that patience, it will certainly pay. Investors, it has been a privilege and an honor to join you all here for another Tip Talk, and I'm looking forward to the next Tip Talk next week. I will see you all there. TipRanks presents Tip Talks, the only podcast where you can listen to the insights, discover the trends, and power up your investment portfolio.